Good day there. Welcome to the closing bell on the, I think, 23rd of November on the Saturday. I'm actually recording it on the Thursday before. And look, I had a look at a lot of charts and I came up pretty empty-handed thinking about, the big picture stuff, the big markets over in the US and what have you, different commodities. They were all, I've been discussing them a lot lately and not that much has changed. We're waiting for Trump to get in. And we've got December coming, where we'll be at Christmas parties, hopefully, and markets can really die down. I'm hoping the rally gets going and we do see a bit of a Santa rally. If volume dries up and the trend keeps going, look, it could be still a pretty fun market to trade over this next month. But everything's pretty much the same as it was the last few weeks. And I've given you the outline in that big picture, the US dollar, that sort of thing, that US bonds to keep an eye on. So today, let's jump into the punters side of the market. There's a little piddler that I've had my eye on. I think it's even a bit early stage for my fat tail microcaps service, which is saying something. Um, and I want to show that to you, give you an outline of this little company that if you are someone who loves a bit of risk, perhaps this one is on the up. And, if they can get things really rolling, they can go many multiples. The microcap sector of the market is starting to look a bit better. It's been such a bloodbath for the last few years. Everyone's a bit gun shy in that microcap space. It's still 20% below the highs that it got to a few years ago. So unlike the sort of larger end of the market, it has still been fairly tough going, but starting to come to life. So look, why not? Let's just have a look at that. I'll show you this little stock and see if it floats your boat. But please go in with your eyes wide open. I've got no stoppy on this, and it's still a pretty high risk play because of where they're at. The company's name is Adveritas, AV1 being the code. And the guys behind that, pretty solid people behind this company. If you've heard of Mark McConnell, he was a founder and ran Citadel Group, which got sold off. He got a big chunk of cash and he's poured a bit of money into this and has been continually building up a stake in it. It's gone through a bit of a tough time the last few years, like so many. It really, the wheels fell off, collapsed from 20 cents to what, under 4 cents or 5 cents around there. And it's just starting to come back to life as revenues start to kick in. They've got a few good things happening. And these guys have this traffic guard, which is for online marketing. There's a lot of fake clicks, a lot of fraudulent activity online in the sort of marketing space. And these guys sort of have an algorithm that is, quite involved and is well respected, that can, work out how much of these clicks are fake and fraudulent and get them out. So your marketing costs come down. So there's a real ROI in relation to what they're doing. And they're looking at different verticals. One, the sports betting, online betting verticals that they've gone very well in. They're looking at different areas of the market. So a very, very big TAM, the total addressable market, ultimately very big. And, if there's this demonstrative return on investment for people to come on board and invest and see their marketing spend going down and becoming more efficient and having a bigger return, there's a big case to be made that the future could be bright. And the revenues certainly are picking up, but you're going from very low revenue to around an ARR of around 6 mil or so. But that's up from only a few mil a couple of years ago. So it is actually growing rapidly, but at a $70 million odd market cap, it's still trading around that 10 times the ARR. So you've got to have that view that it's going to be able to maintain that sort of multiple. But if those revenues really do grow rapidly from here, even if it falls away a bit, they can still rally quite a long way if they keep this current trajectory. And who knows, it could accelerate. It's that sort of a market, I guess, that if they start getting really big clients and getting into a different vertical and that really takes off and the clients they have start increasing their spend, things can really ratchet up, but still have been losing, 10 million bucks, pretty much every year for the last few years, and lots of capital raisings and that sort of thing. So we had Regis, I think, in there, and I've looked at their top 20, and I think they're out now, thankfully. Hopefully, they dumped it over the last few years. Um, but not a lot of fund managers and that sort of thing on their list. But the management's certainly backing themselves. Mark McConnell, etc., really having a swing at this, thinking it's going to get up. So some good names in there. So it's an interesting little play that I've sort of had it on the back burner, a bit of an eye on it, and it's starting to come to life again finally. So let's have a look at the chart now that you've got that little back story on them, and see what you think. So this is the chart of the company. Going back many years, you can see it's been a tough old road for them. This is just showing you very long term, but I think the company really starting, I don't think all the way back in 2013. They actually launched Traffic Guard in 2019. So think of this company in its current form, really looking at it around here. And sure you can notice the excitement early on, all this promise, got an algorithm's going to be huge, the big market we've got to go into, etc., etc. And always the way in these sort of companies, the reality is very different. The time to get revenue going is different. They need to raise money when people didn't expect it. So you have a big wipeout of the shareholders over a number of years. We've also had, of course, the last few years was just a small cap wipeout. As you know, so many stocks just dumped mercilessly if they're not making money. So they've obviously been a part of that. And, I like to look at these waves and the large corrections that occur. You can see it's been a pretty serious sell-off that has occurred, because we're looking at that rally up to about 27 odd cents. You can see it sort of stand out, can't you? This buy and sell zone area being the area where the buying often comes in, and selling pressure coming in there, and we've got that midpoint up around sort of 15, 16 cents. So that's sort of how I'm analyzing the whole structure here. And we've had a really terrible time of it just over the last few years. This is when things really went pear-shaped, all the way down to a low there of, what's that, 4 cents, as I was saying. So that was, though, back in late 2023. So in the last year, it really has been a different story. I mean, it has been coming back from the dead, and you can imagine just how many shareholders have ended up giving up and dumping this stock. And it is actually finally showing some signs of life. So if we're just looking up close and thinking about how it's just been performing, recently, you'd say that's actually been pretty impressive. It's rallied from 4 cents to over 9, so it has already gone up about 100% in the last year. You can see that we've got the long-term uptrend has happened. You've got the monthly buy pivots through there, of course. And I look at these key bars, which is when you get the monthly close above those pivot bars, just giving you the sense of things marching higher. And I can make calculations of those. So things just steadily looking good, and a bit of buying coming in after the AGM, which was just on last Monday, and showing a few figures there of how their numbers are starting to pick up, and just getting some other verticals interested. And it's just getting to that stage where you're getting beyond the fear of things going under very soon, and another capital raising, etc., etc. But if their revenue really is starting to power, going up through, going from sort of $3 to $6 million ARR every year and growing fast, what's that going to be next year? And the cash outflow should start to shrink, but doesn't mean it's not going to need some more capital at some point. It's just that when I look at how it's performed, the whole range of it trading, um, and it's still really down in that buy zone area, down around that sort of, what's that, 7 to 10 cents. It's sort of still in that area. If I was to look at something like this, I'd be sort of, if I was to have a go, I'd have no stoppy at all. I'd be just picking it up when I can, on the back foot. If I was to buy some, I wouldn't be surprised by volatility. I'd buy some more on weakness if I got a chance, and maybe add to it if it, was to really take off, and be sort of taking some money off the table on the way to turn it into a free call option. So that's really the way I go about things. This is a good example. Even here, just to show you what you do. If I was to buy at 10 cents, say, and it was to run to that midpoint of the whole range at 16 cents, so you're up 6 cents. If I was to then sell a third of my position, bought at 10, that means my break-even stoppy would be 3 cents below that, wouldn't it? Because if it fell 3 cents below my entry point, I would lose the 6 cents that I made. So then I would have a break-even stoppy around 7 cents, which would be well away from where it was trading. If it was up around 16 cents, taking a bit of profit off the table, I've lowered my entry price to 7 cents so I can let it have lots of volatility, still stay in the stock. And the worst outcome I can have if I make that my stoppy is I'm going to walk away with the money I've got, which I started with. So just in these really highly risky stocks, having some process that you follow that helps you to really lower risk. That's what you need to do in these things, because let's face it, they can have a great period and then they can turn and go to zero. That is what they can do. So this is the little punt that I'm giving you today, because I couldn't find anything else to talk about. It's a bit early stage, too risky for me to be telling my guys about to trade it right now. But I may have a stab at it as more news comes in, and we see better revenue figures, etc., etc. But for the punters out there, you might have a bit of fun in this, because I think it is coming back to life. All right, well, I reckon that's enough for today. I'll come back with more next week. Cheers.